Welcome to our weekly Forex forecast, and this is for trading for the week of August 3rd to the 7th, 2020. Just a quick disclaimer here before we get started. This is for educational purposes only. Trading is a risky business, so please be careful with your money. As usual, we'll start off by taking a look at our calendar here. So just a quick reminder, we are into August. This is August, summer month tends to be a low liquidity month because many people are away on vacation and so forth. So as a result of that, the trading or the number of traders, and I'm talking about the big financial institutions and so forth that are active in the market tends to go down. That's why the liquidity is quite low, which means the moves can be exaggerated during this month. And this is the same during Christmas time as well. In terms of the news that we have coming up, we have manufacturing PMI numbers from Japan on today actually. And then on Monday here, we have PMI numbers out of the Eurozone. They are supposed to go up because the economy is open now and people are purchasing stuff. So as a result of this, the PMI numbers are expected to be higher than the previous numbers. And if that's the case, that will be good for the euro. Otherwise, we may actually see a bit of a negative impact on euro from that. We also have PMI numbers from the US. So right now, the US dollar is really taking a hit. And it's just been on a one-way street to the downside here. Now, if the PMI numbers come in below expectations, then we're likely to see the US dollar drop further. And then coming up, we also have a CPI from Japan. So again, if the numbers are below expectations, I would expect a negative impact on Japanese yen as a result of that. We also have a cash rate and RBA statement here. Reserve Bank of Australia has basically held the policy stable for now. And at this point, I wouldn't really expect any sort of changes in monetary policy. However, the commentary will be important. So if they express concerns in regards to the economic recovery, that could have a negative impact on Australia. We have seen the number of coronavirus cases have grown in Australia as well, and Australian dollar lately hasn't fared as well. So if the central bank comes and says that they're concerned about the economic recovery and how things are going versus what their expectations were, that can have a negative impact on this. So that's something to watch out for. And if their commentary is negative like that, that will have a negative impact on Australian dollar. On Tuesday here, we have employment data out of New Zealand. Excuse me. So we're expecting employment to drop here. And if the drop is bigger than expected, then we could see a negative impact. If it's not that far off, then it will be okay. I wouldn't expect too much of a negative impact. But if it's way more than this, then I would expect that would see New Zealand dollar drop. But right now, everything has been positive because of the US dollar dropping. So US dollar has dropped so much that all the other crosses have held their own against the US dollar. So even if the New Zealand dollar drops and the US dollar doesn't drop, we are still likely to see the New Zealand USD go up. So just be aware of that. Okay, coming up on Wednesday here, we have PMI numbers again. This is the services PMI numbers out of the Eurozone. Again, they're expected to be higher than the previous number. And if we start to see these numbers drop, that will be concerning. And now we are going to see a negative impact. So over the last little bit, we haven't seen the negative numbers have much of an impact because it was all about monetary policy. But now that the expectations, we are actually living into expectations, and the expectations don't match up, then that would be that would be negative, and we're likely to start seeing some impact. Same thing here for US numbers. If the US numbers continue to drop, or if they start coming out below expectations, that would be concerning. Now, just to keep in mind, we did see that the package got second stimulus package got passed just in nick of time last week, and as a result of that, there will be optimism in the market. So stock markets like that, because there's money circulating in the economy. So I believe everybody's supposed to get $1,200 plus some extra childcare, plus there's more support for business. So overall, all that money circulating in the economy is a positive thing, and we should see the numbers go higher. One thing I would watch out for this week would be buy the rumors, sell the news type of scenario. If we see that even after the stimulus package being passed, the stock market doesn't react positively, then we are likely to see it go into risk-off scenario. So we'll have to see how the market opens and how it reacts to this news over this coming week. So just keep in mind, even after the stimulus package being passed, if the stock market is not responsive, doesn't go up, then we're likely to see all our yen crosses and everything, they could start turning as well. And we'll cover those in the daily, but just wanted to mention them here. On Thursday here, we do have Bank of England monetary policy statement. So at this point, not expecting any change in terms of the monetary policy. But if Bank of England even mentions negative interest rates, then that would be negative for British pound. Now, again, it's back to the commentary. I don't expect any monetary policy changing. And then if they are similar to the Fed in their concern around the economic recovery, where Fed was dovish, and they were basically concerned about the state of recovery. If Bank of England is the same, then we're likely to see a drop in British pound. But if their language is positive and they say that things are opening up, that the way they were expecting, things are going, they're well on track, all of that type of stuff will be positive for British pound. So we'll keep an eye on that. And then we have Reserve Bank of Australia monetary policy statement, tends to come out a little bit later. And then on Friday, so this one I wouldn't expect much of a change based on this, because we would have already seen that previously in the week. And then we have employment numbers from Canada, and we'll see how that plays out. If the numbers are still high, that would be negative for Canadian dollar. And of course, we have non-farm payroll this week here. So at this point, if we start to see that the employment or the employment numbers fall, so if we find that even now, with the economy opening up, the employment is not where it should have been, that is going to be negative for US dollar. All right, so let's get going here. Oh, just to mention, the numbers in the US, the coronavirus numbers in the US have continued to go up, and it is starting to get concerning. But at this point, the stock market seems to be ignoring it because of all the money that's flowing into the economy from the Fed, from the government. All of that is positive for the stock market, and it has been going up. So we'll have to keep an eye on any sort of cracks there. If we see, even after the stimulus bill actually being passed, if the stock market fails to move higher, then we'll keep an eye on that risk-off scenario developing. All right, so let's take a look at our charts now. Euro dollar has gone through the roof. That we had talked about here, how we may see a second leg once it's held here. And of course, so we've had this move. Now it has been repeated here. So this is still looking bullish here. Now, if we take a look, this one has this is the support resistance level that we are in. So it has moved quite a bit and hasn't really done any sort of retracements in the last few weeks here. So right now there's still bullishness in this candle, but we are also seeing a wick. So if we take a look at the daily, we see the Friday close was to the downside. So this is really the first negative close we have seen here. So right now I am bullish to neutral on this. So we may start to see things turn around a bit. So in this case, we may see a drop. We have to keep an eye on that. It may still pull back a bit into potentially into 1.1850 level. Or even into the 1800 level, and then we may see a drop from here. So we'll have to see how this one plays out. But right now there is bullishness in this candle, so it doesn't mean that it will continue to reverse here. So it may push back higher as well. It can go in either direction. So bias right now is a neutral. Now, if it holds below this 1850 level or 1800 level, then I would expect to move back down towards 1.1630 level. So again, this week we'll have to see what type of risk on, whether it's risk on or risk off environment in the stock market. So if the stock market starts to sell off, then dollar crosses will also sell off. So right now, stock market has just been one-way street to the upside. So I would just keep an eye on buy the rumor, sell the news. So once this on Friday here, this was big move up with the stimulus package being announced. So if it starts to go back up again, that will be that would mean then US dollar crosses will also continue going higher. But if this fails at the top and starts selling off now, that would mean we're likely to see the US dollars drop. So right now, this one's still looking bullish. And if that continues, our dollar crosses are likely to continue. So a neutral to bullish bias here for euro dollar. Oh, I forgot to mention the targets here. So I would look for a move towards 1850, and this will be the deciding factor. If it holds above, then I'm looking for a retest of the high at 1900 and potentially even move into 1.2020. However, if it holds below 1850, then I'm looking for a drop towards this 1.1630 level. So neutral to bullish there. Pound dollar, this one has been quite bullish, as we can see a big move up. This entire move that happened during COVID here, when we first started, has been filled now. So this is still looking bullish. It is into resistance, so that's something to watch out for. If it fails to break through the resistance, then with this one as well, we may see a retracement here. So that will be something to watch out for. But once it crosses over, I am looking for the next one, next move higher. With this one, we also have to keep in mind the Bank of England statement, because if Bank of England turns bearish, that could cause problems and we could see this one drop. So that would be the risk here. But for now, just based on the technicals here, this is looking bullish except for the resistance here. Next target would be 1.32 or 1.33 and then 1.3400. So bullish bias here for pound dollar. Aussie dollar here, Aussie dollar did move up, but it is looking a little, the pin this week, this one is not as strong as we saw last week here. There is some bullishness in this candle, but there's a large wick on top, which suggests that we have weakness coming in the candle. So taking a look at the daily here, we see that drop in the daily. So bias here is neutral if it doesn't hold above. So we may see a pullback into this 1.7185 level, and if it holds below, then I would be looking for a drop. In that case, the first target is 0.7060, and then we're looking for the bottom of this candle here. So bias right now is neutral on Aussie dollar, and as long as it holds below 0.7185, then looking for 0.7060 and then 6975. So neutral bias here for Aussie dollar. This one's actually turned bearish here, New Zealand dollar. And in this case, I will look for a bit of a pullback and then a drop here. So bearish bias for New Zealand dollar. Now there is support right here, so do watch out for that. If it fails to break through 6600, this one can still go back up, just like it did over here. But for now, this is looking weaker. So bearish bias here in terms of the targets. First target is 0.6540, and then we are looking at 0.6500. So bearish bias here for New Zealand dollar. Dollar CAD here, this one is still stuck into this support level here, hasn't been able to break through this one. This is a strong support resistance level, and as we can see, price has repeatedly failed at this level, and then we saw price turn. So here, bias here is neutral. The candle here isn't that strong. Even with the strong bearish candle last week, it wasn't able to break the support. And as we have seen, US dollar has just taken a hit over several months now, and we may see it's overstretched at this point, so it is at a risk of turning. And if the if the dollar CAD fails to break the support, I would be looking for some sort of a pullback here. So bias here is neutral. As long as it holds above 1.3330, I am looking for a move higher towards 1.35, and then into 1.36. Yeah, oversold, SB. It's been a week, so it's been crazy. Everything has been overbought against the US dollar. I haven't seen US dollar this week in last 2 years. So it's definitely a weird situation right now. And part of the reason is the stock market is going through the roof. And with the struggles that US has faced, currently with the number of cases, it's leading in the number of cases across the world now. And for a developed country to be at that spot is concerning. So US dollar has definitely seen better days. Several reasons actually why the US dollar is taking a hit. One is that they're printing money like no tomorrow. There's with the Fed continuously putting money into the market. And of course, the amount of debt the US has taken in terms of supporting the economy has also been enormous, which weakens the US dollar. Just the oversupply of money in terms of the US dollar because of the loose monetary policy. That's another thing that's negative for the US dollar right now. And then number of coronavirus cases, that's the third thing. So overall, this is concerning because if the number of coronavirus cases continue to grow, that means the recovery will keep getting pushed backwards. So all of that is unfortunately negative for the US dollar, and we have seen it take a hit. But right now, it seems it's overstretched. It's just way too oversold. It's like we have skewed too much to the negative side, and that's not good either. There has to be balance. US dollar, it's still the reserve currency. It shouldn't be that weak. And I think we need to see some sort of a pullback, if not a reversal, at least a pullback, because it's been too over. It's just anytime anything leans too much to one side or the other, that becomes concerning. So we'll see how this plays out. But I would be looking for a bit of a, it has to start with the stock market though. If the stock market doesn't turn, then unfortunately the US dollar may not recover either until that happens. So this is why we have to just keep an eye on both of those. Okay, so euro pound here, this is bearish here. I will look for a move back towards the bottom of the range. Last week we had talked about how if it doesn't break the high of the range, we're likely to see a reversal here, and now looking for it to drop. 0.8940 is the first target, and then 0.8900 is the second target here. So bearish bias here for euro pound. Euro Swiss franc here, this one's also looking neutral here. Excuse me. Okay, so Euro Swiss franc also looking neutral here. We see a large pin on the top. With this one, I will look for a bit of a pullback and then a potential turnaround here. So bias is neutral, and as long as it holds below 1.0785, I'm looking for a drop then. So first target is 1.07, and should it get through that, we're looking for a move lower into 1.0660 or even into 1.0630. So neutral here, and if it holds below here, then it will turn bearish as the week progresses. So we'll take a look at that during the week. But for now, neutral bias for Euro Swiss franc. Pound here has been strong. Last week we saw that it broke through this little range that it was trading in. It is into the next level of a resistance here, so watch out for that. And if it holds below though, because it's into this resistance, if it holds below, then it can still turn around. But based on the technicals here looking bullish, just watch out for the resistance. But next target is 1.2100, and if it manages to go above that, then we are into 1.2150. So bullish bias here for pound Swiss franc. Dollar Swiss franc here has gone through the roof and it's right into that target here. This has been enormous drop. For the most part, it's because the US dollar has been so weak. So every US dollar cross is stretched right now. So at this point, we are into the support level here. Now there is a large wick, which means on Friday here, we did see that reversal there, but at this point, this is not looking bullish. It's still neutral, because what could happen is we may see a pullback into, so we may see a pullback into 0.9180, and then if it holds below that, we may still see that drop. So watch out for that. Neutral bias for now. The question will be, can it break through the support level? And if it doesn't, then we're looking for that move higher. So for now, a bias is a neutral. I would look for a retest of 0.9071 or a pullback into 0.9185. Those are the two levels to watch. And depending on which direction it breaks in, that's what we will see then. For a Swiss franc intervention, they keep on intervening. Swiss franc is notorious for intervening. Anytime Swiss franc gets strong, we see that Swiss National Bank comes and intervenes in the market. So, yep, intervention is part of their strategy for managing FX rates. Pound yen looking bullish here, and next target here is 139.75, or let's say 80 here, and then should it break above that, we're looking at 141.20. Now this is a strong support and resistance level, and as we see, it comes all the way from here. So we may see price turnaround just like it did here. Watch out for that. And if we do see it come here, we may see at least a bit of a bounce off of this. So bullish bias, I would just be cautious about 139.80. And then should it go through that, we're looking at a 141.20. So bullish bias here for pound yen. Euro yen here, this one is broken through this resistance. This was a pullback that we saw earlier in May, and now it's broken through that level here. So this is looking bullish at the moment. I will look for a bit of a pullback and then further move to the upside. So bullish bias here for this for euro yen as well. So we can just get rid of these ones here. So 125.30, which is where it was. So now again, this one is also starting to come into the strong resistance levels. So keep an eye on that. 126 is the next target. Next target here. So the question in the chat here is, how do I know this? I don't know, just reading the charts here. It's just a learned skill. I have no special skills whatsoever for knowing anything, really. No internal knowledge or insider knowledge, just the charts. And of course, I do keep track of the news. Nope, I am not, what do you see, Nostradamus? I have no idea of the future value of the FX pairs. I just take a look at the charts and what's going on in the market. And based on that, we make an educated guess. It's all about educated guess. None of us know anything. Otherwise, it would be great if we did. Yep, market structure, price action, comments that come out, news that comes out, is just a bunch of information that we are analyzing essentially. So it has, yeah, that's all there is to this analysis. We're just looking at charts, looking at things and just analyzing stuff. Okay, so dollar yen here. Dollar yen on Friday, we did see a big recovery here and a huge move to the upside. And that's how we have this pin on the weekly chart here. So this shows a big rejection from the bottom, which means, so this is looking bullish here. Our next target is 106.35, and we could see price go all the way into 107.50. We'll keep an eye on that. The problem here, we may see dollar yen run into this resistance at 106.50. This is where we are. And if it doesn't get through again, it can drop from here. So watch out for this resistance here. But overall, looking bullish at the moment, 106.50 and then 107.50 would be the two levels to watch here. Aussie yen here. Aussie yen, this is a neutral. We do see that price came into support here, and then we have a very weak candle to the upside. There's all these candles have been super weak. So these candles here are strong, but these have been weak. So it's not totally bullish here. And at this point, I'm just neutral on this. I would just look for a move here towards 76.90 level here. And we may even see price fail prior to that. So Aussie is not strong at the moment, and that's why this candle is so small here. It's the yen weakness that's really pushed this higher at this point. So again, with all the yen crosses, we'll have to keep an eye on the stock market. If the stock market goes off in this buy the rumor, sell the news type of scenario, then it's going to drop, which means all our yen crosses will drop. But if it's happy with the new $1 trillion package that got passed on Friday here, and then we're likely to see the stock market go up, which means the yen crosses will also go up. So the yen crosses and the stock market do tend to move hand in hand. So this is where we'll have to keep an eye on things that that passing of the package there on $1 trillion stimulus package on Friday was a very important step here, and this is why things got pushed higher. So now we'll just have to, now that it has been announced, we just need to keep an eye and see what the actual reaction is once that that positivity wears off. So we may see price go up if the stock market continues to go up. In that case, our target would be the 76.90 level. So I am neutral on this, not hugely bullish here. New Zealand yen, this one as well, we have a very, very neutral candle close here. This is a spinning top here. Very neutral candle, indecision candle. So it did manage to recover from the drop here, but didn't really manage to push higher. So this one could still drop here. So bias is neutral. I will look for a move back down towards 69.50. If it holds above, essentially we're just looking at this one trading in this range that it has been holding on to. So this is where it's been stuck for the last several weeks. And I'm just waiting to see if it will break. We'll look for a retest of 69.50. If it breaks through that, then I'm looking for this outside of the range. Not outside, sorry, I should say bottom of the range here. So this is the range it's been stuck in over several months here. And it just failed to break in any direction. And it has failed to break through the high. Very, very much unlike we have seen euro and pound do. Euro and pound have blown through the resistance levels. We are seeing Aussie and New Zealand have not done that, which means they're weak, and we may see a further drop. So first test will be 69.50. If it holds above, then I'm looking for this move back higher. But should it break through, we're looking for a retest of the bottom, and then we'll see what happens here. If it doesn't go through, we're back in the range here. So this one's kind of stuck in the range, neutral bias for New Zealand yen. CAD yen here, we did see initial drop based on this pin bar, and then it got pulled back. All of this happened on Friday when the stimulus package got passed. Anytime there's more money being pumped into the market, that is positive for the market, and so the stock market went up, and hence our safe havens dropped. Our yen is actually a safe haven currency. When something is going wrong, we see everybody go into the yen, and when things are going well, yen drops, yen weakens, which means the yen crosses go up, and this is why we have seen that recovery here. So at this point, I am not overly bullish. Again, we'll have to wait and see the reaction here. I'm more neutral on this. Price has been trading in a range, so I would expect it to just trade in the range here. That's between these two levels. That's what I'm looking for. As we see, price did try to break out, couldn't sustain that, and we saw this move back down, and it tried to break out towards the bottom. Again, it was unsustainable, and here we are. So we may see something like this. So bias here is neutral. For CAD yen, two levels to watch would be 79.80 and then 78.00. So bias is neutral for CAD yen as well. All right, looking at our commodities here, silver did well. This is the daily chart. We see silver has just gone through the roof here. With the US dollar dropping, our commodities have taken off to the upside here. And silver, like I said, did really well. But now we have a huge pin on top, which shows some weakness here, and it's been stuck in this range over the last week here. So at this point here, I'm neutral on this. We'll have to keep an eye on the lower time frame, which is the daily here, instead of the weekly, because if it fails here, so I would look for a move towards 25, and if it fails, then we're likely to see a drop. So right now that we are seeing the gold, actually we're seeing gold and silver have gone up because of the US dollar weakness, because they're all, this is XAGUSD, so they are measured in US prices here. With the US dollar dropping, these ones have been extremely bullish. So we'll have to see what happens here. Again, we'll need to keep an eye on the stock market, because right now stock market is driving things. If the stock market goes into risk-off mode, then this is likely to drop. But right now, stock market is still holding bullish, and as such, we're likely to see this one go higher. So I'm looking for a retest of 25. If it holds below 25, then I am looking for it to come back down and retest this 23.30 and potentially 22.30. But if the stock market continues higher, then I am looking for a retest of this 26th level. So right now, neutral, but those are the scenarios that I described that I will be keeping an eye on. So it really depends on which direction. So right now, I'm looking for it to go towards 25, and then 25 would be a test. If it breaks through, then I'm looking at 26. And if it fails, then our secondary scenarios come into play during that time. So for now, neutral bias for silver. Gold here. Gold is gold has been extremely bullish, like I said, because of the US dollar drop here. But if you take a look at the daily here, it has been range bound. But every time gold has become range bound, it has taken off to the upside here. So bias still remains bullish here, but we'll have to see a break of this resistance. If it doesn't go through this resistance, then I'm looking for a move back down here. But as we can see, still looking bullish. It's holding above this previous level. Once it breaks through, we're looking for the next level, which is 2000. So bias is bullish here for gold. Oil here, oil's been stuck in this range for a number of months right now. And at this point, it is still neutral, hasn't really gone anywhere. I will look for this type of a move here. So bias is neutral. It doesn't turn bullish till it breaks through this resistance level at 42.40, and it hasn't managed to do that. It's still stuck in this range. So neutral bias, I'm expecting it to trade between 42.40 and 38.80. So bias is neutral here for oil. Copper here, copper has been stuck in this range for a number of weeks now. And as we can see, it's just gone back and forth, but it is making lower highs here, which means we may see a drop. So bias will be bearish here for our copper. And in terms of the targets, first target is 2.78, and then we're looking at 2.75. So bearish bias here. Watch out for a bit of a pullback though. We could get a pullback into 2.85. So bearish bias here for copper. Bitcoin has become very bullish. I don't have the weekend numbers for it. So Bitcoin trades on the weekend as well. I don't have those numbers, so please check those. But based on this weekly close here, this is looking extremely bullish. And again, Bitcoin here, again, weighed in US dollar. Right now, what we are seeing with the cryptos, the reason the cryptos are one of the reasons, I should say, the cryptos have done extremely well is one, people are searching for, they're trying to move away from the US dollar and looking for different ways. But number of banks have been embracing, central banks have been embracing digital currency. And as a result of that, our cryptos have become very bullish here. So this is bullish. 12,000 and then 12,300 will be the next two targets to the upside here. But once the market opens here, I'll get my weekend results and then we'll look at it on the weekly chart, on the daily chart, sorry. Based on the weekly here, this is looking quite strong. It is into resistance, but looking strong. 12,000 and then 12,300 will be the next targets. Okay, S&P 500 here, this is looking very bullish here, as we can see. So right now, bias is bullish. I will look for a move towards 3,300. And then if it breaks through that, then we are then we are looking at basically filling this gap here at 33.30. So bullish bias for now. The question will be, can it break through the resistance? If it doesn't go through, then we are looking for that risk off scenario where we have buy the rumor, sell the news. Now, it's not guaranteed though, it's just something we have to watch out for. So if it doesn't go through, then look for selling come in. Once it goes, if market likes the package, then we're looking for 33, and it could even go all the way to test the high there. So that's what we'll watch out for. Right now, this is bullish, and next target is 33 and then 33.30. So bullish bias for S&P 500. Nasdaq here, this is just the hourly chart on Friday here. As we see, it had come down to fill the inefficient move here, but based on the package announcement here, we did see that market go back up here. Now, as a result of that, this is looking bullish as well. We can see it is still trading in a range though. It hasn't broken out of this range. So for now, bias is bullish. Watch out for the resistance right into this 11,000 level. If it doesn't go through, then I am looking for a bit of a drop here. So bias is bias is bullish. Just watch out for the resistance. And if it does go through the resistance, then we'll be looking at this 11,300 level, but we'll tackle that on the daily. Right now, though, just looking for a move towards 11,000. And that will be the deciding factor. If it fails to go through, we're looking for a move back down towards 10,300. So bullish bias for Nasdaq here. And Dow Jones here, this one also, we saw a similar behavior on Friday. We saw after the package got announced, stimulus package got announced, we saw a move back higher here. The candle close for the week is neutral here. It did drop based on the previous week's candle. We were looking for that drop. It did drop, came into the support, and then it bounced off of that based on that stimulus package. But right now, this is looking neutral. It's completely neutral at this point. So we'll have to see. I would look for a move towards 26,760, let's say. And then if it breaks through here, I'm looking for further move into the highs, 27,200. So right now this is neutral, but if it fails, just like we looked at the other chart, if it fails at the high, I'm looking for a drop back down towards 26,000. So for now, bias is neutral, and I'm just looking for a bit of a bullish move, but if it fails, then we're looking for a drop. So this Dow Jones has not been as strong as Nasdaq or S&P 500. This has more weakness here, as we can see from the charts, than we saw for Nasdaq. For example, Nasdaq technology companies have done extremely well. The earnings that came out for technology companies were they were good. And as a result of that, Nasdaq has just been basically breaking through all kinds of resistance. Dow Jones, on the other hand, not so much. Okay, we have DAX here. These ones have turned bearish. So we have, last week we had that pin bar, which suggested the move lower, and we got that. And now we have a very solid bearish candle close here. There will be some reaction from that, just overall market going up because of the stimulus package in the US, even though this is not a US dollar index, but they tend to impact each other. So I will look for that move higher, potentially into this 12,500 level. And then if it holds below, I'm looking for a further drop here. So overall bias is bearish here. In terms of the targets, and the target here would be 11,950. So bearish bias here for DAX. FTSE as well, we saw this drop here. And on the weekly, last week, we did have a nice bearish candle close. So we saw that follow through here. Now looking for a further drop here. But again, watch out for that pullback. So the positive generally gets gets goes through all the stock market, not all the stock markets, but a lot of the stock markets here, or the major ones at least. So with this one's looking bearish here. Watch out for that pullback towards 59.65, or even slightly higher into this 60.20 level, and then I'm looking for a drop from that. So bias is bias is bearish here, so a bit of a pullback, and then looking for a drop. So bearish bias. In terms of the targets, first target is 5,800. Actually, we could go all the way into 57.50, and then potentially into 56.65. So bearish bias here for FTSE as well. And Nikkei here, Nikkei also looking bearish. We see that price has been trading in a range here. So it's finally broken through the first part of the range, which was right here, and now headed towards the second. 21,600 is the first target, and then 21,300. 365 is the second target here, but again, watch out for a bit of a pullback here, potentially into the support level, and then looking for a drop here. So bearish bias here for Nikkei as well. All right, so that's it for today. But before we wrap it up, I just wanted to announce something here. A lot of people have been coming back to me, and I had reduced the price of the course earlier, and people have been coming back to me because it's gone back to normal. But the conditions haven't improved around the world, so I am dropping the price again, just to kind of help everyone through the COVID. All of us have felt the sting, so we'll reduce the price as well. So instead of $497, the current price will be $297, and this is for the Learn to Trade Forex course. It includes the stuff that I do, looking at Forex, how I look at support and resistance, different patterns that I look at, doing top-down analysis, signature trade setups, pivot points, spin bars, so all of that. And if you're interested in this, you can just go to the website tradingwithvenus.com /Forex, or you can go to courses there, and you'll get a discount here. Instead of $497, you would only need to pay $297, and you want the where's the coupon? Sorry, my apologies here. Coupon is We Got This. So that would be the coupon. And if you are looking to join my daily market analysis, I will reduce the price on that during this COVID times as well. If you're interested, you can check that one out. Just go to Trading with Venus and click on the courses tab, and you'll see the price. And the coupon code will be the same. We Got This. So that's it for today. You guys have a wonderful trading week, and I will be back again. Also, I will be doing a webinar this Thursday as well. I'm off for the couple of weeks after that. We will do a webinar this Thursday. Keep an eye out on your email. You'll get an email notification from me on Wednesday with the time for Thursday. And of course, there will be a recording on YouTube, so don't worry about that if you can't attend in live. But if you do want your questions answered, it's a good idea to attend the live call. So that will be on Wednesday. I will send out an email for the Thursday webinar. So that's it. Have a wonderful week, and I will see you again. Bye for now.